Well, I don't like that. Okie dokie. Kind of a rough one. Kind of a rough day. Hey, welcome. Well, I'm pretty happy right now that I have some of these tickers on my portfolio because AMC just really pooed the bed today, so not looking good. Very, very ugly. Yeah, what is there to say about it that hasn't already been addressed? It looks like, and I'll double check, but it looks like it's going for the wave down across. And I know we've talked about it before. There's it's probably going to be some confusion about it today. Base stream constantly. Well, it's lagging like really bad. So I'm not doing this every day. Well, yeah, hopefully we don't have this kind of a ongoing problem. It's been a big issue the last few streams, just haven't had good connection. And I have troubleshooted it. I don't really have the answer yet. I'm not sure what's going on. But our internet provider is, you know, it's pretty much all we've got, and it's good. I mean, it's got ridiculously high speeds when it works, but it periodically just dips really hard. So it's not a consistent connection, and that's been causing some issues. I think that's the main problem with the stream lately. So anyways, so we're gonna have to address the elephant in the room here, which is the hook. So this did not happen, and when we you're like, yeah, no duh. When we built this out, we were talking about what needed to happen for upside and what was expected if this broke back out. So this is an M cross low. It did something really weird, which I don't like, which is it avoided coming down. So it's going to be a bit of a backwards kind of analysis here at first because I missed a day or so. And I think it was Thursday was the last time I streamed. So it's been a few days. But there were some other notes on this chart that I had taken off. And I'm looking back on it now. I'm like, I don't really know why I took those off. Because frankly, what happened here almost, I hate to say it almost necessitated a drop, but it kind of did. You got this double up thrust. Anytime you get that big pop at the end of the day, like just be worried. I don't know. I don't like the idea of telling people to be afraid or something of something, but like AMC is very notorious for this end of the day pump that is actually a UTAD, and that's what this was. Now you might say, well, we didn't know that there was going to be like this debt conversion thing going on to get more equity. Well, I guess maybe we did know. I mean, when they pledged to not do any more dilution, now they're just going to turn to these, I guess these, these notes that were offered and cash in. I don't really know exactly what the deal is. I saw bits and pieces of the filing, and I just saw that through the Discord. If anyone wants to post a link to it in the chat, that would be great. I'll read through it more thoroughly. But I didn't see that coming, you know. But that being said, this was problematic for a couple reasons. So one, when it came up and over, we had talked about this potentially dropping down to near like 291. And that would be a good place to kind of hit that rebound. And it never did. It never came low again. Now, some people are going to look at that. Turn it down a little bit. The volume. Some people are going to look at that and say that, well, you know, it made a higher low, right? But the problem was that before doing this, it had actually already gone up. This was a distributive action. And we had the last stream that we did. In the last stream that we did, we talked about this, and I told you guys, like, there were some problems with it. One was there was no volume on the breakout. Two is it immediately goes up and does this distributive type motion. So my expectation at that time was that it would drop down again, and then it didn't. And if it doesn't do that, there's really only one of two things that's going to happen, right? You're either going to go up and essentially do it again, which is what happened here. This is basically your UT and then your UTAD, which is weird because it doesn't look particularly distributive with the low volume and the really low volatility. And I'll admit, like when we were talking about it last week on AMC, talking about it on Thursday, I was a bit perplexed by it. I think if you were on the stream, you probably remember between all the cutting out and all that junk that happened, you probably recall me talking about it back and forth saying there's some problems because the volume is really low, but it's not shown that it's breaking out. It hasn't advanced in the right way. Instead, it was advancing in a very weak distributive way that did not look positive. It looked very negative. Weirdly, though, it didn't come down, and that's where we run into problems. If this had initially come down, I would have said at that time, yeah, it's a potential sign of weakness, but at least it would have come back and checked that creek, and it would have went ahead and made that low. And you can see that it didn't happen here. And then what happens is you get this from like Wednesday all the way through Monday, you know, you get this really long-winded buy up that's very weak on volume, except for these random bars that probably are, again, shorts covering and just re-entering positions. And then look at where it drops back to. It hits that 291 right after open and just keeps going. And I think, again, to some degree, we had that we were in that ballpark originally. We were talking about that drop here, but it just didn't occur. So this ends up being basically like a flagging action. It did not make the breakout. It looks like, oh, well, you had this on the chart, right? Yeah, I did. It looks so similar, right? Well, yes, it does, but it's not the same because what this represented was a break above the drop ledge here at 312 and then a recapturing of that region right here at 310. That did not happen. Instead, you got 1-2 up thrust into that region, and that's exactly the opposite of what you want to have happen, right? So a consolidation here above with support would have been a buy signal, but it had to happen here. There had to be that volume for that buy-in. And because there wasn't, and the way that this set up, it just set up like distribution. Easy to say with hindsight, I guess, now that you're looking at it and it's already dropped. But I would suggest to you that somebody probably already was aware that that was happening because there clearly was no effort to buy it up. I don't know why they would have known that or how they would have known that. Or maybe they weren't fully aware and they were planning to take it up a little bit more, again, to like 330s or those 350 levels. And instead you got this news. So on the whole, I would suggest to you that I don't particularly like AMC right now at all for anything. Anytime there's a play that is basically more confusing than clear, it's not really a good trade. So if you're looking to like kind of make a big buck off this at this point, it had its moment. You know, this was it right here. I think that you had a really clear possibility right? Not inevitability, but a possibility here. If this had broken up and over, it would have gone. Like, there's no doubt in my mind. That being said, what about this on balance problem? What about all this other stuff we've been talking about? I mean, that hasn't really resolved yet, right? No, it hasn't. And I'm not really sure, if I said it before, I'm not really sure that it's going to resolve the way that we initially suspected it might. I think those are things that you have to just sort of take with a grain of salt, because ultimately you don't know what you don't know. Sometimes things rhyme, they're very similar, sometimes they're exactly the same. And then sometimes it's not even close. So how are you supposed to know? You just kind of take a sum of all the data and you do your best with what you got. And that's all that you really can do. So when we looked at this with on balance, we were really focused on two things. Now, number one was this had to hike the on balance volume, and it did, enough that when you drop it, you're going to get a nice pullback. But the problem with it is that there's not really any, in my opinion, there's no real significant pullback. And I have looked at this and looked at this and looked at this, and I just don't see it. Say whatever you want about this as like a hook. I mean, clearly you could read this as especially here, and you can see it very clearly now with that as a second cat ear, like a weakness, right? Extreme weakness, is it failed to take advantage of that wedge breakout. Instead, you have this major pullback. So it's basically a fake out. It's like a head fake and then pull back down. Because it was. I mean, that's exactly what it is. There's no volume on it, and that's what we mentioned. It didn't drop back low and recheck the creek, which is what we mentioned. There's all kinds of little problems. So instead of buyers taking it up and just pressing against this low volume input, they're just giving up. And that's kind of where I concluded. I mean, that's kind of the best thing I could say last week was it's almost like the smart money / the buyers are just not there. They're not interested in buying it up here, which would tell you that there's more downside coming. Unfortunately, like it had to be this or nothing. So when we look at on balance volume, I kind of think it's the same way. I mean, this is where you needed to have that pop. You can see it's not there. Well, that looks kind of ridiculous now, Booksy. Clearly this was a cat ear. I wouldn't say that. The weird thing about all this junk, and we're getting to it, is that everything has to be taken as it is. When we see this build with strength, those crosses work out well. When you see it build with weakness, a lot of times the crosses are not what you're expecting. They're kind of lower and they're weak. We have a similar motion here. Didn't even really make it to here. Again, this is where it needed to break out. I don't think it made it. You can just visually look at it. It didn't even, it might have touched it, I guess, once last week right here. It didn't try to again. But overall, it's just weak. It just never gets above that marker. And so this is like a very, it's sad because obviously we wanted to go back up again. But even that I was thinking was probably going to be distributive. But instead, we get this really low hook, and now you're left with a very real possibility that you're going to see a full-on S-curve. So at this point, I've already measured it out. This goes to like 237. Potential for that, there's a lot that could be said about it. It doesn't have to be like that deep if it just breaks down the same that the initial drop was. It would only go back down to the floor at 247. But here's the problem. When you do an S-curve, there's two spots there's 2 to 3 spots. So one would be here, right? One would be here, which is kind of the one I picked. And then one would be on the drop ledge in the middle. Now, those are not that different when you look at that as like that could be the center of an S-curve. What they represent is they represent crosses, cross downs or cross ups. So this is a cross down in regards to a couple different motions, right? Like one is this kind of upward momentum that's being lost. You're crossing down beneath it. You're dropping through it. The second is, of course, this alternate trend, which is very weak, which really just comes from this breakout to that first support again on weakness. And arguably, could it have picked this other one? Yeah, but that ship sailed when it failed to make a higher high up here at 350. And we talked about that. that was already gone. So this is very much like the same idea. You're basically just seeing it play out on like a bigger scale. And so you're looking at the resistance and then the support, and that's the cross down. So any of those markers could be seen as like a halfway point for timing purposes, which means that I've got it spread out pretty far. But it basically means that you're not looking at a significantly longer period of time. Like you can see this one, if I go from the tippy top through that drop right there, it's actually over, it would have been over Monday, which is pretty close. This is a 4-hour chart, so it's about 4 hours off, 4 to 8 hours off, full day off. If we had looked at the second drop, again, kind of using like the alternative of like, well, there's the drop ledge, that doesn't actually end until next Tuesday, so that's a significantly longer period of time. So you've got a bit of a window here. This is the same window that I was using for upside. Why is that the case? It just is. When you get to the end of the cat ear, I feel like we've gone through this quite a bit, so I don't want to kind of repeat the same things every single day, but this is a bit of a different one because we talk about this in terms of like waveform, but every time you get to the end of the wave where the cat ears present themselves, you're probably going to find the two targets are basically polar opposites. So you're going to find that where you set up it's going to be very likely like a 50-50, like this way or this way from the top. And that's exactly what we see here. You can see that drop is exactly like halfway. So if you go to that high value from Monday, it's essentially like halfway. Well, I mean, it is. It's almost exactly halfway from the top. So that gives you a sense of like, that's a long distance to travel down. Again, that may not be the 50% marker, but if it is, it's going to go to a new low to 237, which is probable. This isn't like way different than what we talked about before. And for the record, I mean, just because we're here, we did have in our mind that this might be extremely weak. When we talked about it initially when it came down, and I said this was kind of the earlier model, like, we may not even get much of a rebound past 330 or 338. I thought for almost for sure that it was going to come back up there. There's a huge amount that's not being checked right now. So I do want to mention this because even though AMC looks dire at the moment, it's really important to note that these places that are not being tested are not unimportant. It's very important to realize that, like, yeah, it didn't go the way you wanted it to go. It might bleed down. We've got two targets that are pretty common sense. One is like right on the previous bottom here, 245. The other is 236. Those are pretty low, right? We knew that this 270 area to 280 area might also be a potential based on large retracement from these particular lows, specifically like if you do like the fib retracements on this third wave here, potentially, even if it's an ABC correction, the C wave, you can see that that's actually right on the 786. So are we really in like that bad of a situation? Well, if you're looking at this one as the breakout, which is above the creek, I mean, I would have used it. It's really wrapping around the 854 right here. So these were not like foreign levels. We looked at these previously. It's just that it went to the lower lows, and now it's sitting on the 786 here, and you can see that dropping again. It's like 270 to the 854 on the second fib retracement. So whether you're using this because it's an absolute bottom or you're using this because it jumped the creek and they made a new bottom, either one is on the 854 right now, one's on the 786. They're very deep retracements, but that doesn't necessarily mean it couldn't have a pop again. The problem is that this really buried itself quite low, right? And even if it were to go up again, it's a very difficult one to argue that it's going to break and just keep running. However, I'm getting to a point here. It's really important to know that those levels, those drop ledges, just like the one from way back, I think this is really important just to, again, kind of stress. That these drop ledges, these gaps that are being left open, these places where you see these kind of cliffs appearing, these are not insignificant values. And they may not seem important because you're not getting to them right this second, but make no mistake, like that 485 is still on the institution's charts, right? And even this one, which, we've largely kind of went and filled those gaps, that 406, the 485, those are really significant. The 331, they should be the ones that have the most attention given. They are, in my opinion, the most significant of the levels, and then 303, right? So you've got maybe 1, 2, 3, 4 that are hyper significant, and the 303 is what we just dropped off of. Again, I'm not going to draw it twice on here, but you can see it back on March 26th where we left off there as well. So when we're looking at this, it's important to note, just because it left it's not going back right this second, doesn't mean you should ignore that. I think it's a very important ledge. So again, the 330, that's the same one we just talked about. That's from back here. That's the 332. That's where it dropped right there. And then the, I know I said I wasn't going to mark it again, but the 303. When you zoom out a bit, they do kind of cascade down, but I wouldn't say that they're evenly paced, Even in divisions of 2, I wouldn't put it that far, like a 50% reduction every time. So right now, you might be thinking, again, all is lost or something like that. It's never going to go back up. Well, yeah, it doesn't look good. I would say that because of the confusion of it, unless this has a major reversal that's obvious, I wouldn't bet on it just popping and running all the way up right this second. Why not? They just passed that bill, hours ago in the Senate. Isn't that going to cause the whole market to explode? I don't know. I don't know how the market's going to respond to it. It's a mixed bag, that bill. So we'll see. Frankly, these markers are not unimportant, but they're also not going to tell you everything you need to know either. So you have to sort of just take it for what it is. I would suggest to you that if this is indeed going to have a rebound, it's probably going to be something like a 618 type rebound. So again, previously, we had talked about coming down low. I'm going to delete this for a second just to clear this up. Where this is kind of a middle zone for the stock. I think that we were identifying that correctly. What we were hoping for was we were really hoping for that, what we would call a shallow S-curve here. And because of news and announcements, we didn't get that. So now we're really looking at this helicopter view thinking, well, is it over? Again, I don't think it's over, but I do think that you have to kind of consider what is there. We have not what you want to be there, right? We have on the chart one more lower support. This one broke a while back. It broke back here on the 23rd, and we talked about that. I said it's a sign of weakness, but to me it didn't mean that it couldn't go back up. It just meant that if you break this again after rising above it, you're probably going to drop it. And that's what happened. Unfortunately, it happened in a really negative way. So that sign of weakness right here on the 23rd, it was truly a sign of weakness. And then again, it never makes that rebound, so it doesn't have a UTAD right here and then drop below. Instead, it does it very, very low and drops down early. But the next one up is still here, it's not gone anywhere. So if you're looking at it from a helicopter view, this pocket right here is technically a potential for rebound because this area is, again, where the creek intersects. I think it could go significantly lower, but if it drops this level right around 276, it's probably going to end up being kind of bad. So you have a gap fill at 276. I don't know where that is. So if you've got one, I'm not really sure where it is. It would have to be right here. And I'm not seeing any gap. So maybe on a different time frame it's there. Doesn't look like it's there on the 4-hour. 276. I don't see a gap there. I don't see any kind of gap. Maybe in extended hours there's a gap. I don't know. If there's not any gap in regular trading hours, those bars all overlap. So, and I'm on the hourly right now. Again, if it's smaller than that, it's possible, but... So what does that mean? Does it mean that we're just not going to go back up again? Well, listen, this S-curve is not done until it's done. So you can make projection after projection and suggest that, well, it could go that low. That's totally true. 100% valid. I definitely believe it. Like, it could go that low. It could come down here right now without much trouble. But what is a shallow S-curve? How do you define it, Booksy? And is it really that ambiguous that you can't tell us like a definite answer? Remember that these things, they're not in a vacuum. They're based on the setup as it is. They're based on what is possible, not necessarily what will happen, but what's possible. And then we try to determine what's the most probable. But, you know, we've done this before, and I've had different kinds of ways of describing this. I've described this in the past as like a falling diamond, where you actually get like a widening and then a narrowing. It's a weird way to describe it, but I've described it that way because sometimes you see this kind of a widening. It looks almost like a parallelogram, right? But you get this kind of widening, and there's a definite like widening here to some degree. And then a narrowing. Other times I've talked about it more in terms of like a rebound. You know, that's like when we talk about these guys coming down. Just, this is an example, right? But if you look back here, check out this move right here that happened. And take that measurement and build it back out on that S-curve and see where it ends up. It's almost always that it's roughly a 50%, but it's not that complex to me. I think about it in terms of the initial drop-in, usually. And that initial drop-in has like a ledge up here. I would have measured it from, if we were just looking at it, I would have measured it from here probably to this one. I would have been a little bit off. It may be closer to the original pop. But that typically is it. Now, why is that the case? I don't know. Other than to say that what I think is happening is that the same shorts that are dropping it down here are getting out down here. I also think that typically you can, if you see that diamond structure on the S-curve, you can typically imagine a kind of channel down, right? So this ultimately does build out as a sort of a channel, right? But it has to do with more like distance traveled type deal, so on and so forth. It's a pretty close channel. It's not like perfect, but it's definitely implied. And I think you could even take it up a step further and just say, well, it's like this, you know, that's the channel right there. Yeah. So like the idea of this initial drop being very similar to the final bounce could be described a number of ways. And I think that you're not wrong as long as you understand like where to measure from. So usually what I do is I measure to the LSPY, which is this, again, this kind of area where you get this weakness, right here, from the drop in to the weakness. And that's usually where I see it because they're shifting the range down, right? The whole point of the LSPY is to get ready to drop in. And we've seen it before, and it does work. So if you go back here and you use this same idea, it doesn't have to be perfect, just an estimation. That drop in should be the same or about the same as the rebound, and it is. And again, I could take this one up right to the gap. It probably ends up being pretty much 1-to-1 with the rebound. And time and time again, this has proved to be a fairly useful tactic. Again, not the most perfect thing ever, but it's pretty darn good, right? Even to the point where you can use this on like a macro scale, which we did, right? And we could use it on a kind of a big picture scale and say, well, you know, let's take this from the drop ledge to, you know, that first LSPY on the macro. Did that work out? Yeah, it did, right? So I think the theory behind it that I have is fairly simple. It's like it's kind of a no-brainer theory, right? Which is that what you're doing is you're generating kind of like a backup zone here. Think about it like a kind of a boomerang, maybe. You're creating like an anchor, almost like a tether ball, maybe, where you're kind of swinging around that anchor. And the initial sell-off and all the shorts that are open are really to get you to that anchor. And then when they get low enough, you're buying in and covering, and you get back to that anchor. This is part of the reason why I use these, because they often are true, that you're going to come back to that level at a later time, sometimes beyond it, but at least back to that level. So how does this apply to where we are right now? Why are we even talking about this? Because it's not that different than what we're experiencing right now. The question isn't, will it go back up? I think that's, to me, it's like, well, it probably will, but it's more like how much is really being built for that. And it may not be that much. It may not be as much as you expect. So like back here, we have a similar issue where this looked like it was going to build out and pop, but ultimately it goes down again. It does the same thing. It iterates, right? It builds out, pops, then it builds out, pops. These are the same. And I've been talking about how this was an iteration for a while, but this build out right here coming down into the pop down here, it's pretty straightforward. Again, it's pretty much the same move. And then you get the exact same phenomenon to a degree from here to here, and then popping again, so on and so forth until it changes character, right? It does try to do it again, but this time when it goes low, it doesn't go as low. So the initial drop in doesn't actually make an LSPY. So then when it drops again, it pops, it jumps the creek. These didn't allow you to jump the creek because they positioned it so far away from the creek that it just has enough to get back to it. Can it really be that structurally the same? Yeah. Again, I don't think it's as complex. I may be using like a weird way to kind of measure that and visualize it, but I really think a lot of it just has to do with sine waves. If you think about it, like down, build out, up, right? And then the down ends up being very similar to the up if it's in a channel. But I think there's also kind of a motive there to not break out. And that's why when you see that down and it fails to do the same thing, and in this case it failed to come low again, well, guess what? Now you're getting the breakout, but you're not getting that. So it's going from this like drop ledge, right, to this little LSPY, but it doesn't come down again. So now when you break out, you're getting this kind of rebound, and it does. There it goes. It goes right back up to the rebound, so on and so forth, and it breaks out above. So that's the change, right, in the momentum, the swing. You can see it visually. You can feel it in the price action, sort of like in, again, a simple way. That might be a way to visualize it. So right now, what would we be saying about this exactly? Like, what does that imply? Well, you're going to have to use some critical thinking, because at first glance, I guess I would say that there's a chance that this was indeed one of those bigger reactions to something that happened earlier. But if I have to pick that out and like say, well, where did it go? Which one was it? Where's the drop ledge that measured this reaction? I'm really not sure right off the bat. Okay. I think you'd have to kind of take it and almost go backwards and see if it matches any of these drop ledges. I'm not really seeing it, like I said, right now. One of the main ones is like this 485 to 5 area. And this does come down to a consolidation point here, but it certainly wouldn't be enough to convince me that that was some kind of a macro version of the same thing. Nor would it really make any sense to do that in that way based on where we are. But locally, so I can't really answer that question is what I'm saying. I just don't know where to look. But locally, I think you can do it. It's a similar setup. So you do have a drop-in right here. And this drop-in, I think, again, is fairly straightforward because it built out super high, which was like 393. It drops in and it kind of feeds itself back into this LSPY. Again, maybe I'm a little off, but that's about as far as I would take it right there. So you have this build out, and you're probably wondering, well, where is this going to happen? Had it happened right here, it would have made sense. This would have come back up to the 350 mark, and that's what I was looking for, was like that rebound to come up right here to the 350. It would have had to make sense with the grander picture, but it did. And that's a weird thing about it that I didn't really fully understand. That's why I wasn't understanding what was happening with the volume here. We knew it was too weak, didn't look right. This reaction would have been fine to me because I would have been like, yeah, that makes sense. It broke down. It's doing a hook. everything would have lined up to have taken you back up perhaps this week, late last week, early this week, up to 350. I would not have seen that as a bullish outcome. Just to be clear, I would have seen it as a UTAD moment, but it would have sufficed to say, like, that would have been sensible to me. So instead, we have sort of some secondary issues here, right? So we don't have any kind of a clarity, I suppose is the right word, about this. Instead, we're like low, and we didn't make that move down. So again, we're looking at the big picture. Like, we know this has worked in the past. It's been a pretty simple phenomenon to follow. So like, where would you place it? It definitely is the same spot. Like, it's still right here at 332, but perhaps just like back here when it did this breakout low, this doesn't ever come back above kind of that initial drop in, which was in our case 333. So perhaps we're looking at something more like 333, in which case, yeah, it could be like right now. It's definitely not as pleasant and it looks very weak. I think the way this built out is kind of whack. It still doesn't look right to me. But then again, you know, it is what it is. So do I think it could pop and go to 333 still? Yeah, potentially. This, again, pretty similar to what we saw previously on these reactions to the upside. Once it starts coming down, you build out that base. This is usually where we end up seeing the hook develop. And then the distance traveled, again, typically from here down, you could measure it. This is important because this kind of gives you an idea of where the bottom might be. You can measure it down, and that ends up being pretty much perfect, right? Now, I'm not using, you might be kind of confused about the top because I'm not being really clear about it. You might be like, well, why aren't you using the tip top? Why are you using this little spot? Well, there's two places I typically look, but they have to do with kind of the same thing, which is, one is the area that it actually drops. So I use this term drop ledge, and then I'll talk about dropping a creek. And both of those sometimes are the same. They could be the same point. In this case, I'm really using the creek drop right here. This is when bears are now in control. And so that distance right there ends up being like the more dominant measurement, not to the tippy top. Weirdly. Well, can't you measure from the top? I mean, the fibs work. Shouldn't it work? Yes, it does work. But I'm just saying that, like, from my experience in doing it often, this tends to be a better target. So it basically goes right down to the first ledge, in this case to the bottom. This doesn't always have to be the same bottom. It could be different. But it goes down to the major ledge where you have the LSPY range build out. Sometimes I'll use like a liquid center instead. That's a more conservative approach. I don't usually go to the top, like the tip top though. I don't think that's the best way to do it because it typically is wrong. It just is. This ends up usually giving you a pretty solid measurement, and it does. This is almost perfectly like 1-to-1. It's off by like a few cents. That's it. So what would I do here? And would I do it any differently? Well, I'm using this because I think this was a very, very steep trend. This is a kind of an odd one because it does drop the trend really low, right? But remember, this is all kind of one final move, and I think it dropped pretty much at the top. Like, if I had to guess, and I'm not gonna zoom in on it just yet or anything like that, but I had to guess, and if you went through and looked at the because of this cross down right here, I'm thinking that it actually dropped as soon as that range was over, and that range is over right here at the top, right at 394. So you see how it crossed up, it pushed up, it does this secondary motion. This is an up thrust. It goes up above 406. That's like after the trend is already broken. The trend was established. Again, it's extremely steep. So it's almost hard to see and perceive on the hourly because there's only 2 candles there. But it is there. And this is the breakdown. The cat ear, the double top motion is the break through that trend and then going up, hooking, failing, and then dropping down. Once that drop down happens, you're looking at the bottoms right there. There's 2 bottoms, 2 lows. So it has to be either the place in which this triangle or the price in which it dropped one of these two lows. That's not a huge amount of space, right? I mean, you might say like, yeah, that's a lot of room, but like it's pretty close. Like these are all very similar. It's again a few cents off. I'm going to go ahead and err on the side of bullishness actually here in some ways, because I think it was 393. I think it was right where it dropped that uptrend. That's when the bears are definitively in control. Again, I'm looking for like, where did the cross happen? Okay, but it's still going up. Bears are certainly like doing this UTAD here, but ultimately this is where bears kind of take the reins and drive the price to this particular price at 333. We know that this was like a halfway point. Everything else lines up pretty well. I think that's the marker. Now you take that same thing again, and it's a challenging one because it's assuming that you're definitely going to have some kind of a rebound. The question is, do we do it on 333? Do we do it a little bit lower? I don't think it really matters that much. I'm just kind of like hover around that 331 and mirror it. Again, it's a few pennies off, but this would place you pretty much exactly where we are now, which is 280. Well, why didn't you do this before? Because again, the bottom itself, it just depends on like what you think is going to happen. Remember, when this guy hits the rebound back here, it makes a higher low and then it jumps up. So this is a shallower motion. It doesn't have a full S-curve down. It just doesn't. You know, that same measurement that we applied doesn't actually go all the way down on this S-curve, does it? So in circumstances where it's bullish, you may not have the full drop. Like this was always a possibility that it came back below. You can see right there. But because it doesn't, when it doesn't do that, that's the change of character that says, oh, when we go back up, we're not going to just meet this target. This is kind of like the last target. If you want to say like you're stretching away from the goalpost, right? This would be like the final target. This is as far as you can stretch. This didn't have to go that far. If it had gone all the way down here, just as an example, because this is what happened every other time before it, this was the change of character. When it rebounds, we wouldn't have expected it to come back above. This is very possible that if it had gone down here, you wouldn't have broken the creek. You would have just come back up to, let's say, 263 after hitting a low at 240, nearly double bottoming on the big picture. But because the change of character happened, that's why it was such a significant moment, because it was like, oh, it changed. Now when the rebound happens, it goes up to where? 279. And that is what happened. It went up to 279. Then it's above the creek, and that gives you a chance to change direction, becomes more bullish. So, for example, right now, had this, you know, again, you're using that as like a measurement tool. You're probably thinking, well, that seems really obvious as a 50-50. Why not just do that if we knew the drop ledge at 331 was the halfway point? But we don't know that. And like I just said, it could be even lower. But the problem is that when you look at this, this is ultimately like the rebound. This is the sell-off that happened. Then it consolidates. This is the ledge that's built. If this had happened earlier, it would have been likened to the change of character. That's the shallow S-curve. This would have broken out and gone up to 350. Imagine for a moment that it did do that, and it did it over here, right? Like we were kind of thinking it might. Does this not give you sort of a precedence then? Because now you're above the creek. It gives you a precedence to potentially go farther. Doesn't have to be that it goes forever. We were thinking like, well, 370 might be enough. It could even go all the way up to 4 something. And then 460 was really high. That works if it's a shallow S-curve. So in my brain, it's not a matter of like, well, we got it wrong. I got it wrong. I mean, yeah, I thought this was probable. But then when that breakout happens, it's like, that doesn't look right, first of all. Now we have to kind of adjust our expectations, I guess is what I'm saying. Now we have to go back and say, all right, well, what's the maximum distance here? Because it did not make a shallow S-curve. It's not going to go and change character. This would have been a breakout potentially. And then you could be talking about stuff like 50-50s, like, oh, well, it broke out. Now let's talk about 50-50s. Yeah, it did go up 50-50 here after it broke out. Well, you can go back and look at the same thing here presently. Right here. And you could say like, well, 50-50 could take you back up to 412, which is where we were looking. So like those are things that progressively could have worked out. But because we did not take that path and we've distributed, we're kind of putting ourselves into one of these scenarios now, these earlier ones. So I hope that makes sense. But basically now that reaction doesn't get you over any creeks. Like the only necessary reaction at this point may be just to come up and fill the gap at 330. And that's it. And I don't think when I say necessary reaction, I don't necessarily mean that it has to be like, boom, immediate. Some of these are extremely fast. Like they go right back up. Most of these are like that. But every now and then those reactions take a lot of time. Like this reaction was really slow, like super slow at first. And then it exploded. Eventually it starts really ramping up. After it makes the jump, then it really picks up. Because smart money buy-in, yada, yada, yada. And probably, again, on the bigger picture, that is a much bigger breakout. Okay? So at this point, what could we hope for, right? If we're not going to get this rebound up to 350, where could we possibly go? Well, I mean, like I already have it on the side here, but I would suggest to you that right now, this seems to be the desired location. So this 330 down to 379 region is pretty darn close. Could it be that you're a little off? Maybe it goes a little further. I mean, I think it's going to go down to 277 or go down to 278 or go down to 275. Look, it's pennies, okay? If I'm off by 1 penny here, it means I'm off by like 2 pennies total. So, I mean, it adds up pretty fast when you're talking about like these kinds of areas. But I would suggest to you that that's the most likely place. What about this deal of going down super low, though? Like I said, just because this is the most likely place doesn't mean it's always the case. You can have a change of character in one of 2 ways. So the second way that you could change character is a much more bullish, or the first way is a much more bullish way, which is you make the shallow S curve, and then you don't make the full connection. So then when you rebound, you actually jump over the creek. That's what happened here. That's one way. The second is actually a bearish option. We don't see this that often, but it is very important to note. So like technically when this guy rebounds, when this guy dropped, right? My guess is that you could have done certain measurements that may have helped you determine where this is going to go based on some previous drop-ins and like another halfway point. I mean, it's definitely there as a potential, right? When you go back and you measure it, you're like, oh yeah, that's where the middle was on that drop from the ledge. But when we get to the rebound, it's so low that there really wouldn't have been any recovery, at least immediately, right? So the rebound ends up being right here, which is fine. And it does come back up into the range and goes beyond it, but ultimately it didn't break out either. So you have to kind of like wait. Now this was still a very bullish setup because again, it comes way back into where that LSPY is and it builds support over it, which is part of the reason why I thought it was really good. And the bigger picture had this huge setup that looked like it was ready to finish. Great. But for every one of those, there's probably at least another one or 2 on AMC where that setup does not give you the satisfaction, right? So like right here, this is an example of one where you have a ledge and it drops to an LSPY. But then on the second move down, you can see it goes significantly lower. It's pretty close. It's not like way, way off. This ends up being really close to the bigger picture halfway point if you look from here down. So like again, hindsight is 2020. You can go back and say, wow, that was really precise. Yes, however, because this continues to have weakness and it drops below, then any kind of reaction is now considerably more bearish. It's never going to get you back here at this point. So this is another change of the other opposite kind. And it didn't even come up that high. You know, it actually only goes about maybe 3/4 of the way. So there was an opportunity, sure, that this could have, I don't know, bounced back up and come back up to 645 or something like that. Why doesn't that happen? Thought you said it happens every time. because it's a bearish change of character. It's not done with a bigger picture sell-off. So you have to kind of keep things in perspective. And that makes it a bit tricky. So I think right now what we can do is use this as a tool, a potential tool to like understand like, okay, this is pretty unlikely at this point it's going to come back above 330. If it did, I'd be fairly surprised. You know, I mean, it's not impossible it could have a big run or hit like near 350 and slide back underneath 330 or something like that. But based on this setup, this is about as far as that whip around needs to go to just get you back to the same point. Remember, we're talking about shorts entering here, driving the price down to this target, and then shorts exiting here and going back up to the same target, right? And kind of meeting in the middle at that rejection point. And then we'll see what happens, but probably, again, not likely going to be bullish. Instead of it being higher up and possibly breaking out, now you're below. So when we look at this from that point of view, pretty easy to see how you could get over here to 330 or 331. Again, maybe around Thursday this next week or Wednesday this next week. Doesn't have to be that fast. And you'd basically be making that reaction and then not breaking the creek. So I'm gonna make this like a bolder orange for you, and you can see what I mean. That just now you're just sort of stuck underneath it. It's just the correct reaction, but instead of it being higher where it breaks out and potentially goes farther, now it's lower. It's not likely going to break out and go farther, and it still gives you a bearish outcome. Now you can just take the stock right back down, right? And you can still reach this kind of greater goal potentially of getting down to here. In fact, I would even go so far as to say that this might make sense if you're trying to, on the bigger picture, remember, trying to get this guy down to a lower target. Like I just said, the 50-50 may seem really obvious at first glance, but then later on, you know, when we come back through here, if we look at the bigger picture, this particular place that it's setting up right now, if you look at the halfway point from 332, look at where that leads you. That's a redundancy, right? That leads you right back down to, so from 330 down to 280, now that leads you right back down on a 50-50 to 238, which we're talking about all-time lows, because 239 was the previous low. So these measurements are building out a structure to get you down there. This is nothing. This is a potential backup. And then if it drops again, now you're looking at an even bigger cat ear of sorts, and ultimately like a bigger sell down that doesn't break the creek and then drops low. And this is perfect. I mean, what's crazy about it is that this is the final creek. It looks like we're going to hit it now, but I almost bet, I wouldn't put too much money on it, but I would almost bet that it's not going to break just yet. If we have a sign of weakness, that might make sense, kind of like we did here. But remember how here it didn't work out? I think in this one, it probably would. So this would drop to like, let's say 274 or something like that. It doesn't have to be that low, but it could be if it's going to be an SOW and then breaks out. I think you're going to have probably not this week, but maybe Monday next week into the following week, going into the 9th, which is when the tariff deadline is. You might actually have a bullish run. Makes sense given that the bill thing just passed. I think you see that push up and then it comes back low. Is 556 out of the question now? I've never had 556 as very likely. If you're thinking about that gap fill and that top, I mean, that was a long time ago. There was a very, 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 very small chance that it hit something like 5 something based on some other trajectories. But I mean, I can't say that I ever really found it favorable. This was the only thing I used to kind of devise like a high target, and the highest I was looking at was like maybe 515 was this widening. I remember talking about that, and there's like one other thing which is right back here, this one. Like that kind of presented a possibility that it could get up here, but correct me if I'm wrong, but I don't remember saying that 556 was really likely. If you're asking if I think it's probable right this second. I say no, but nothing's impossible, you know. We don't, just like there's some kind of negative news, some kind of positive news could drastically impact the market. So perhaps this weekend will be a really big weekend for the box office and give people reason to kind of squeeze it back up towards 333. That seems likely to me. And then we'll see. You know, I think after that point in time, really just talking about, to me, it's like apples and oranges. It's kind of just like, well, one's a squeeze, one isn't, blah, 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 blah. But I think all of it is really the same thing, which is probably just shorts covering at this point. I don't think it's likely anything particularly interesting. I mean, that's a really boring way to put it, but yeah, I'm just of the opinion that we're probably going to see 330, but that probably is it. What does that do, though, Booksy, with this whole idea of on balance volume, you know? Well, this is where things get kind of interesting from me, from like a techie kind of heady standpoint, because notice that while this is dropping, and it certainly looks like it's about to just fall off a cliff, I'd be really interested to see what would happen, and maybe it's as simple as just a hook. But I'd be really curious to see if there's some kind of a large buy-in here that really props us up significantly higher before dropping it down. And I don't want to get into like too much detail just yet about this, but because I think it's a bit speculative. So you see how on like, this is weird, right? Because see how on balance volume looks like it did what we were expecting it to do on price action, but price action didn't do this. This is exactly the same as what we were just talking about to some degree with the idea of coming back up to 330. This actually went back up to that same level on balance volume. Like it already did it, which is, again, kind of bizarre, right? But the on balance is still like really, really high. We haven't seen anything like really, I mean, there's nothing here that looks like it's just dropping off a cliff. If the goal was to get it back down to any of these other creeks, they're not doing a very good job, are they? So there's two questions, right, we could ask. One is, has something changed? And what would that maybe be? And I think we already know the answer to that. So one thing that happened in December, if I recall, of 2020 was the dilution announcement. I believe there was a dilution announcement around December in 2020 that may have been a significant contributor as to why the on balance dropped from like really the high of the time all the way down to the low of the time. And back in 2020, this would have looked more like this. I mean, it went all the way back here, right? And it went all the way down. It could have been that that was due to the dilution. What has our CEO done? Well, he said he's not going to dilute anymore this year. That doesn't mean that they couldn't do something that people use as an excuse to sell it off. But what if that then presents like a different kind of dilemma? I think that there's a very strong setup that was built here, but I would have to go back and look. But I wonder if something changed in this area, because I believe they made that announcement at one of the earnings. And I think in the beginning of the year, while this is all setting up, I don't think that was, because this is right in December, right? This is when they did the dilution announcement. There's no indication that they're going to stop dilution at first. But it was like the following, correct me if I'm wrong, but wasn't it like the following earnings report? I'm curious to know if that was actually the reason why something may have changed. It's possible. So we could ask that question, like, has something changed that might alter the direction of this? Whereas this is setting up like it's going to go. Maybe they already did check it. I mean, they did come back and hit it. What are you trying to say? Well, consider that normally when we see this kind of stuff, if I saw this cross up and over and it didn't check it, I would be saying out of concern, it's probably going to come back and check it. It's impossible that at that time there was a change in decision. There might have been an expectation that this was going to go to like 460 or this was going to go to 5 something, right? Again, and there would have been some kind of a dilution announcement dropping it back through. And that's why some of this setup, again, potentially some of this setup looks like it points to that direction, but then all of a sudden it just doesn't, right? Something changed perhaps right here going back into March. I'm just curious about it. And I wonder if it has to do with this earnings report right here, which was February 25th. I mean, it's really the same time. Because this would have been when that could have been altered. And it does look like it's really similar, that area right there. Because now when this builds out, it's no longer this like really steep trajectory. There's nothing there. It doesn't exist. Instead, it's this very flat trajectory. And I wonder if they thought that they were going to dilute again. You know, I genuinely think that they may have, operators may have been like, yeah, there's going to be another dilution, you know, later this year. And we're going to build it out into that earnings report in, again, May. And that might be why some of the early signals that people were getting, I'm not making excuses for myself or anybody else, but there were a lot of weird like inconsistencies with the price action going into May. And it didn't have to just do with the tariff stuff. That was there. But there were a lot of early targets that were right around this time period. Remember, when we first measured it, it was months and months and months ago. And it was measuring out, this was pretty accurate. It was like the week after May 2nd. So everybody thought that the May 15th week, including myself, there's a large number of TA people that were like, oh, the May 15th week looked like it's setting up the same. Even people like your Roaring Kitty or whoever were talking about that. And it ends up being really delayed. And I didn't start seeing signs of that delaying until later, after that earnings in that 335 area and watching it come down. I was like, it's really bizarre, right? This is back, I don't know, maybe in like March, late March. I recall at that time saying, I really think that the August is looking more and more likely. And it seems like the stronger setup. And I had seen it before as a possibility, but it wasn't like my number one. It was just kind of there. Like, this could take till August, mostly because of the 2-year cycle that I was anticipating. It's possible then that on balance volume, maybe in the same situation, where instead of having this kind of hyperactive pump, anticipating, again, a dilution announcement, which would then potentially plummet the stock. It did back here. That's what initiates this drop down, right? So maybe that, again, that same idea was intended to play out, but then when they announced, and I would have to double check to see when that was, I thought it was the following earnings. That could have been a big change for the operator's plan, that, well, we're not going to get the dilution announcement, so we're not going to take it up as far. We're going to do something different and keep it a little more mild. Weirdly, even at that time, I was thinking like probably wouldn't matter. And so I hadn't really considered that. The only thing I did consider was that, well, maybe this tops off low. And we've gone through this enough on here. I'm not going to preach like, here, prove this, you know, like here, I prove why I'm right about this or that. All I'm going to say is that I had talked previously about this being a sell zone, my concern that this was going to be a place of contention, that 330s would be a problematic zone, 315 to 330s would be a problematic zone. That's where we dumped off just a minute ago, twice, 330 and 3. And so I knew that those were problem areas going into this. I knew that 4 was really like the minimum. It seemed like the most likely place. I didn't say minimum. I think I said like 370 or 360 was the minimum. And that 430 was likely going to be the high. So, you got 4 right in the middle as the more likely target. 4 seemed necessary because you didn't get that back up before. Again, it's that reactive move on the bigger drop, the bigger picture. This to me would be right. Except, again, we're not moving anywhere. It's like, why are we not going down? Well, what changed? Lots have changed, Lots of stuff has changed. If there's no dilution, there may be a secondary level at play. I wonder, And I'm not sure about this, but I wonder if there's, I guess I wouldn't even really know where to start with it. That was scary. Jeez. It's a really loud knock. All right, hang on. Anyways, so I'm not sure yet, but I would say that that would make some sense, you know, that something changed and that we may not be going down as low as anticipated. This was kind of always on my radar because we're doing comparisons. I think it was built that way. But instead of kind of building out like it could have, maybe up here with some more strength, we don't get that move. Instead, we get this really low, weird low build out. I would not be surprised in the least if this is actually pointing to like a new objective. And I wonder exactly where that objective might be. I guess it would make the most sense to me if they used a... It's got to be this, because they would use the last known creek. August 8th. So this looks like definitely a lot higher. So we're talking about August the 6th. Yeah, there is another consolidation right here. So that's pretty significantly higher than this kind of like massive pump and dump. So now we have to ask the question, does that make sense? Yeah, it kind of does if there was a change right there. So I'm going to do one more thing, which is I'm going to measure from here to here. So we're going to say that it may go to about 22.85. So it's still a reset. It's still a really low number. And that middle zone is right there. That's interesting. Is it? Yeah, look at where that is on the this setup. There's a double bottom in that region, and then this is where it kind of breaks out going into May 15th. So that is a 50% marker from this top now down to this low, which is where that creek is. What does this have to do with price action, you might say? I think it has a lot to do with price action, but ultimately, like, this would have been a very different scenario. This would have been much more like a big repeat of what we experienced last May. And I do think that's probably what was an aim here. It was going to be really volatile and crazy. But this looks very muted. And rightfully so, you kind of see that there's like a missing chunk. It's like, well, we're not going all the way down here now. Well, I mean, there's a huge amount of space on top and bottom that are just not accounted for now. Instead of doing that, and I had this weirdly as a level anyways, now we're probably going to see something very similar. I think it's weird anyways. I don't know. Maybe it's not that weird. Probably going to see something very similar here. And I bet it's going to move pretty fast. Yeah. See, it's like hovering. It's like hovering above this, like it's going to try to plunge through it. I'm willing to say that I think this is very likely based on the way this is set up. And this is probably going to move rapidly. It's not going to be like a simple short thing. It'll be like a long-term thing. It'll be really fast. It's different than some other stuff. So instead of going ridiculously low, really only need to get down to here. So the precedence for this might seem like, all right, well, you're just kind of like throwing things out in the dark. I'm really not. I think this is already designed a precedence for it. I think originally what I thought was probably wrong because there's no dilution. So they're not going to get the same kind of sell-off where they can drive the price from ridiculously high and buy in a ton because they're going to be able to drop it a ton. So they're going to do like a more muted move up and down. This is still going to get you to a new low, but more than likely. But it doesn't require as much movement down. This is still going to require some kind of a, hey, we're dropping. And this is not it. This can't be it. If they're going to try to do that. Well, what if you're wrong and they're not going to go down that low? You know, then you just be wrong, Wixie. Well, the only other thing I can think is this, because there's a small support at 34. I'm just looking at it like creeks, right? And you may not think the creeks are that significant, you know, in this time frame. I would argue that at the lowest, at the highest, it still has to be like 34. That would be like a dip with like a rebound here, like I guess you could call it a retest on this area. That's sort of the highest I would place it. But even that, it's like it's not really equipped to get there right now. So, because look at where the 50% is on this current S-curve. You guys are like, oh, it's totally equipped to get there, Booksy. Yeah, eat your words, Booksy. All right. It's equipped to get, it could totally get there. I'll take it back. You guys are like, thanks. This is a very different setup, though. I don't know. This is very strange to me to think about this, because then that makes me wonder if there's an even bigger S-curve. And, like, timing is really important. This would have to drop super, super far really, really fast. I just don't see that. The price action is moving right now. It's down 10%. The unbalance is barely dropped. It's like hovering above this level right here where that buy-in happened. I'm just not seeing like a cliff. Well, let's say in theory, Monday, Tuesday, it does pop. This is not halfway. The thing about S-curves is they can't, if they develop a bigger one, it's usually two S-curves, like one S-curve down, middle, one S-curve down. So it goes S-curve 1 goes to cat ear 1, S-curve 2 comes from cat ear 2. So you always see that in the small, like you can see an S-curve right here, and it builds out, and there'd be another one right here, but it ultimately have to go really low. I don't know, it doesn't seem right to me. My point is the on-balance is like very elevated, so extremely elevated, and it doesn't look like it's ready to just dump off the face of the earth just yet. And that if you look at the creeks, there's really maybe two places to me. This still looks like a halfway point, like you would chop and then drop again, because these type of curved creeks don't really, they don't typically hold up. They just don't. Anytime we have a cat ear and there's like a curved creek like that, it's pretty rare. I'm not saying it never happens, but because you can't say that with almost anything in the market, but it's very rare that it holds up. This will be an equivalent example, I suppose. It's not the best example. There's not much to it. I don't really like this one either. But it'd be like saying when this jumped the creek here, that it was going to come back. This is a harder one to draw, but it'd be like saying when this jumped the creek up, that it was going to come back and like hold here and then just break out. It just doesn't normally do that, because the whole point of that second cat ear is usually to dump you beneath whatever support you made. So, and it does. This is a pretty clean 50-50 through that bottom support. And again, like, this is not the exact same, but they're pretty similar in terms of setup. This would have had a final creek right here, and it does. And it's pretty close. It's not exactly right, maybe a little low, but it's pretty close to right. So this pushes you away from it, and then you come flying down to it. That's what I'm saying. Like, that's why I think this might be it. And that was probably why they spent so much time, to some degree, really building out a trajectory, like a new trajectory that's not as steep, since they went back and checked it already. It could even be a little bit higher. It's right in this pocket around 24 million. Okay, well, I'm comfortable saying that I think those are the right levels. I'm not really comfortable saying I know exactly how it's going to traverse them just yet. I'll have to think about it. Usually there's an actual final like upthrust, but it would be very short-lived. And again, I think this was another dilution, so it's like you don't have that news. So maybe that's part of the reason they're taking this as far as they are. It wasn't that big of a deal. They're altering their debt, but it's not that big of a deal. Like, not enough to drop it, 40% or something. I mean, there had to be some other reason, in my opinion. So let me think. So if we need to get down to here, and when are we going to do that? Maybe let's say Monday the 14th. Yeah, I mean, it's adequately positioned. So you could have an upthrust that just goes back to like 40 million and then sell off again. That should get you through this ledge there, which is where it would intersect the oh wow. On balance is a really very interesting. Look at that little SOW right there. Yeah, that's fascinating. I wonder if it doesn't go down all the way. I mean, who knows? July is a whole new month. There's like whole new things going on now. What does it mean for price action? Well, if you just joined, it probably means that the price action is not going to go back above 333, or it's unlikely. that it goes back above 333, and then it's probably going to go down to new lows. I think it's time. I don't believe it's very complicated. Yeah. I could be right. This one's a little odd. December isn't too far, but I think it may represent different things. So July 18th keeps coming up. That's come up maybe like 6 or 7 times on the stream. So there's something going on with July 18th. I suppose if this is a kind of macro S-curve, that we may expect there to be a second sell down at that time. None of this really gives you, not for me anyways, none of it really gives me a very clear, like this is definitely what's going to happen kind of thing. I don't like it. To me, like that's already the drop, so I'm not really sure why you'd have another one. Yeah, it's really close to correct. That's the same motion. So what seems most likely, I suppose, and even though this SOW is a little off, I wonder if it just bounces there and then drops down to that, and that's where it sort of subsides, and that's the main S-curve down. So it might get a little bit of a pop, but then that's probably it. The other thing about this, in this particular view and looking at it, is that this does, again, not take into account that other reaction, which I don't think would be the same as price action anyways, because it's not. But it would be right here instead of down low. So there's a curiosity in my brain about it, because I'm wondering if you need to have a, like let's say it does pop to 333. Would that be enough to get people really excited? Because the on-balance pump, if it's the same, would be like this. It's the same as that drop here. It's not this guy. This is something else. And then I wonder, from that point forward, that's just a reactionary drop. If you then have a 50-50, oh, that actually works quite well. My charts are messy, but what I'm doing is I'm just measuring out where these ledges are. Like that's where it is right there. It just dropped it. It goes back to this top. And then if you look at the reaction, let me show you where I got that from. We were doing this early in the stream if you missed it. This guy here. So that reaction, try to separate it a little bit. That reaction presents itself here, just like it would in price action, like a 333 pop, 331 pop. You could come all the way back up, and then probably again going into Thursday, Wednesday, Thursday, consolidates. And if tariffs end up dumping the market down, this gives you that the rest of that move. It's actually quite clean. The rest of this plays out as expected. So then the measures make sense. This is a 50-50 on the second ear, and it comes down and finds the target that it's actually aiming for. right there. This is distributive because it's coming back below this trend. So you have to get back into this wedge. Otherwise, it can't go lower. It's not a wedge, sorry, it's a channel. So it would do that, and that would make sense. They developed a new trend here. And then you've given yourself some room, and this is a bit confusing because I think at this point it's a little more speculative. This is farther off, but we can look at that new measurement down. Yeah, and there it is. There's the intersection right here. That's the wave right there. So that lands at like the halfway point on this move. So this creates like a new standard S-curve. It's probably that simple. Something like this. It's a lot of downside, but you got to remember, like during this time period, like what would have to be happening is you'd have to generate a kind of, and again, maybe it doesn't go down low. I mean, there's really no way for me to know that other than just this is where the creek is. That's all I could say. And I think that's on purpose. So I think they're doing it on purpose to get back to this like midline. And they may not go any farther, but we really don't know for a fact that it drops below here. And if it didn't, and the price action is lower, then what we will have is we'll have a big divergence, right? That is what we want. And honestly, it's probably better to have that divergence. We could get it here, but at this point, like we would definitely get it on the macro no matter what, because this was a low, remember? So unless this drops all the way down below this negative 1.9, and I know on balance gets screwed up with dilutions, but unless that happens, like this is definitely going to be some kind of a divergence. So I'm not particularly concerned about that. Like long term, if this hits a new low and it's anywhere from 10 to 24, it's going to be very, very, very strong bullish divergence if the price action is below 339, like super strong. That's the kind of stuff that gives you like the big squeeze that everyone wants to have. Which I'm still thinking is probably going to be 20, not way beyond, which is still a huge move. On the low side, I think you don't have to worry too much about that. Because, let me just put it this way, anything below 339 is a spring. We've already established a kind of phase B bottom at 245. Like technically, could it just dip beneath 245 and be done? Yeah, but it's unlikely because you've developed a very clear trend long term that's designed to get you down low, probably into the mid twos. And that makes the most sense to me. But really anything below 239 can constitute a spring. Previously, we'd seen 180 as likely. I don't think it's out of the question, but we'd seen that as possible and likely. And we've seen 226 as very possible for other reasons. But I would say that if it hits 239, and it hits 238, you're already in a spring territory. We'll have to wait and see how that develops going forward. But so this is really more or less like the same as the scenario that I have right here. It's just missing. You can see it's missing it. You're like, well, that's crap, right? It didn't have that move. So what happened? I'm not sure, but I do think it's possible that it's still there. And it happened in like reverse, which is, again, really strange to think about. But if you think about it as, hey, we're going to prop ourselves up to drop back down, then an up thrust to like 331 or 332 it's low, but it fits the bill, and then dropping through this new 50% marker, which is around 280, right? Right here, 278. That gets you to 236. I mean, it gets you lower than the bottom. So that ledge that's built around 333, 331, measuring to the very bottom of the floor, which is 239, the 50% marker is 282. It's exactly where we are right this second. So you're halfway from that ledge that was built not that long ago, a couple weeks ago, to a new all-time low. You're already halfway there. The issue that I'm running into is, like, I think ammunition is one thing, and you certainly have a big volume sell-off right here. It seems like a huge volume sell-off, like it's about to dump off of a cliff. You just keep going. I'm not sure yet if that's enough. And weirdly, again, it's missing that kind of reactionary move here. I just don't see it. It would make more sense to do it once you get equal parts away from 332, though there are bearish outcomes, and we talked about that about 30 minutes ago or something. There are certainly bearish outcomes if this continues to drop, because any kind of reaction up then doesn't even get you close. And really at that point, you really should be just looking at stuff like, $3. If it continued to drop and it makes a super sign of weakness down here through like 268 or something, I don't think you could say that it's definitely going to 333. I think you'd have to make a concession that it's very possible it just craps out. It's not going to go up again. If it stops now and has a strong rebound going into next week, then I think 333 is very possible still. I think it almost might be necessary, and it makes sense to me that there'd be something there. I don't know the inner workings of AMC sell-off. So, like, as much as I've watched this chart move around, there's always an element of, hey, what are the operators really trying to accomplish here? This looks super correct, though, right there. Look at that. That's like the middle cross. It would be great as a stopping point for a distribution or a final bottom. So we've got a lot of possibility here. If it has a final bottom here, that'd be pretty interesting. Something like an LPS almost on the on balance. Anyways, so all of this seems fairly reasonable. Like, I'm not inventing things. It's all kind of there. There's pieces that are pointing towards it, intersections. It's not that complicated. There's 50-50 markers being developed. I can see the waves starting to build out in these reactionary moves with downside. Really just trying to get a grip on what's most likely. So let's talk about GameStop. It's more or less like the same thing that it was last week. GameStop does not have a 10% sell-off today. It's down like 0.98%. Pretty low drop. It has some similar problems to AMC. It's not that different if you think about it in terms of like what's happening. There's a pretty low volume buy up here. It looks a bit like a wedge. You are getting a bit of a distributive type action, but it hasn't yet dropped. So I'm not concerned. Unlike AMC, could this still hold up? Sure. GameStop could come down to maybe 23.80 and still be relatively strong. Just like AMC kind of looks more like a Monday move to me than anything else. I'm not going to say it couldn't happen this week, but just looking at it, it could probably wait till Monday. Likewise, if you're just somebody that's like, well, I like this, but I don't think you're right about the nature of it being bullish. Well, just consider that again, the creeks have been checked 1, 2, 3 times. Didn't make a lower low. It's above that area. It's had an SOS type moment. It pushed high. AMC failed to do that, right? We were just talking about that on, on the price action. It failed right here to make that advancement off this low. It did not get above that 315. It needed to get above that 315 to make that reaction. It did not. And it has distributive action into it. GameStop's a little bit different in that it did get above where it came above before, which is 23.85. It did push higher than this 24.30 area. This is, again, one of those situations where I don't like the idea of wait and see necessarily, but I would suggest that unless it breaks above that 24.5, and again, I could see this as an SOS right now, but it still needs to break above the SOS. Then I think you really could get a pretty massive push. I don't want to say the sky's the limit. It's probably not. But at this point, you're looking at very likely reaching this trend, which is near $26 to $27. I think I said it on the Discord at one point that I was pretty sure it was going to get to 27. To me, it's a mixed... I have mixed feelings about it. And as you're aware, I think that there's problems with the weakness that GameStop showed in the top and then coming back down into the creek. But it's also things that GameStop has done before. And there's been issues where I've looked at something and said, it kind of looks like a distribution. And then, it develops over a longer period of time into something that looks quite bullish. So when I look at GameStop right now, all I see is the major creek drop. Big pump, major creek drop. Looks like a 50-50 swing roughly around it. I also see the potential that this is going to be a rising wedge with a drop. I don't find it to be particularly scary if it drops. It just goes back down to 250s. Long term, that may not scare you. 22. I don't know why I said 250s. I meant 2250. Long term, that may not be a big deal. The biggest problem right now is if this is a macro, bigger picture S-curve, it still hasn't made this reactionary move yet. It hasn't done it yet. So there is the question of the same kind of idea here. We were talking about this on AMC. Does this move necessarily happen? Well, yeah. I mean, in some ways I say it should have. It should happen. It could be that that's what's setting up right now. But as a downward motion, this certainly could plunge you to potentially new lows at $19. And when you look at it from that point of view, on the helicopter view, you're talking about breaking down through another ice level, which is not good. I did an adjusted ice here because I think that it's appropriate to try to do that. It is not the best, I think, to just kind of keep altering it, but we already knew that this one had broken, and that's where we are right now. And you can see that that's a pretty important breakdown. In addition to this kind of falling triangle breaking, it kind of pushes up, tries to advance. I know this is going to sound rough to people that really love GameStop and really want it to go, but it has to... confirmation in this case is pretty far away. I would say that coming back up above 34 with support and not distributing is the confirmation, which is kind of crappy because that might be halfway up the move. And that's not ideal. You could use other ways of determining whether you think it's bullish. Right now, the fact that it's holding up here is fine. The fact that it has a pretty massive, it's holding above that lower creek, that's fine. It's good. There's nothing wrong with that right now. It looks positive. The fact that it had this breakdown and kind of left pieces and didn't come back up here, that's also kind of good. I mean, it's got a huge gap. There's a large amount of space to take you back up to 37, which again puts you over the top. That's positive. So there is a potential for a wave here to form that's quite bullish. The fact that there's an acceleration going on, and we talked about this previously, but there seems to be a pretty strong correlation to that same time period in September, even coming out to all-time highs. And it's long-term like that. It's not just short-term. There's like a huge amount. This isn't perfect. You know, I might be off a little bit, but there's a large amount of trajectory input here on the big picture that seems to be suggesting this wants to go back to all-time highs sooner than later. Worst case scenario, I'm thinking January, like a Santa rally. Earlier than that, it may start as early as September and begin to build out a large S-curve, which is what I'm thinking. And it still might slump a bit in October, right? In mid-September, October, going into November, not really having like a strong advancement before finishing the rally or finishing a bigger rally going into January. So for now, I have to just kind of leave it at that, because at the same time that that's going on, that is all happening while there's this sort of refusal to go down low. And like with most stocks, if you look at something like this and you were thinking about it critically, and not because it's GameStop, but just because it's any other stock in the market, and you're looking at this, you probably suggest that this is going to come back down and hit the creek, and it's going to use some of these less severe creeks as like halfway points or whatnot, you know, to get you down really low. It is cattier. It is developing that way, and there's not really any way around it. While there's these upside trajectories, I think, again, considering what we know, these downside trajectories are equally as valid. They have to be considered. So there's certainly a possibility that this is going to end up back near the bottom at some point. That doesn't mean that it has to be now. It could be way later. And I've mentioned before that coming down to like 17 almost, I want to say it guarantees it, but it almost creates this bizarre widening that could happen where if you come down to like 17 and then it were to break out there, it would be very bizarre, because I think you would have to then say, well, it set a precedence for coming back to that initial low. And in the case of the macro picture, that's way down here at like $9.55. So it's kind of a weird setup, because again, it sort of sets this precedence that there could be another one. And it's just kind of crazy talk, I know, but we would get there when we get there. I'm not going to do that right now. But my point is, if this is a wave down, then that's the direction it would head. And it would definitely look correct to me to say that. But with upward trajectories, the S-curve should still have quite a bit of room to run, at least to 52, and then potentially all the way up to 120 for now. That's as far as I take it into the next year, if it takes the bullish path. The reason that this has been so frustrating for me is because these cat ears are extremely bizarre. They're like nothing I've really never seen it like that before. Bits and pieces, I guess I have, but not quite like this. The way in which these moved in this range, it's like they went to the targets, but they took the weirdest ways to get there. And y'all probably remember the initial targets we had from back yonder. Like, this was the curve. I didn't mess with this, guys. Like, that's it. Like, the only thing we messed with was the timing on it when we went about through this halfway point and we were looking at it again critically. Like, it went there, and it went to the first one at 28. It just did some really bizarre stuff. So I don't know if it's like somebody's changing their mind because of what's going on. I really couldn't tell you. I think it's speculative on my part. It seems like a change of character, like somebody's deciding to get out or get in or something, because you don't usually see this kind of movement. I understand about the offerings. I understand about the Bitcoin purchasing. I get that stuff. Don't get me wrong. But the way in which it's set up here is super bizarre. You know, it's just weird. If it were any other stock in the market, I would have to be a little bit more bearish about it. I think I probably would be. Because again, I'm looking at it, I'm like, that doesn't look good. It did a cross up and then immediately dropped back down, and it's having trouble getting back above. That's not good. It just isn't. So it's just bizarre because GameStop's got this strange pattern of behavior of, I wouldn't say doing the unexpected, but like kind of playing expectations against short positions more often than not. And shorts have had a good run of it the last 3 years, but yeah, so this seems right to me, short term. And then I don't know from there. I think you got to like just kind of weigh the possibility that it doesn't go all the way up. So if there is a fake out breakout, I would expect it to maybe pop up to 26. But if it then distributes again, I think you're going to be in pretty big trouble, because not only would that be a small term kind of a fake out move here, but you could run into some serious headwind coming back down. Well, what I mean is that shorts could kind of double down on it if it does that, because that would be like a fake out on the top. So for now, skeptical on GME. It has a lot of potential if it can make that bullish leap here, but it has to sort of prove that that leap is going to happen. And we just haven't seen it yet. We're really on the edge of it. You can see right there. Really, really close. So if by Monday it's sitting over here, maybe by the 3rd, it's sitting over here on top of this, I'm going to have to just like sort of lean on the side of bullishness. Like, yeah, it could be a fake out, which, I mean, it is what it is. You know, if it pops here and then drops, oh well. Oh well, you know. But even that, I still think that could just be a way of quick shakeout. It's kind of a bummer. I know it looks like another 50-50 like either way, but I wonder, you know. I'd almost rather it go down first, to be honest. I think going down first would be a lot stronger. Because if it goes down first and it holds up, it makes a higher low, or just slightly lower low, like in a kind of a spring format, I'd have to see a bottom and then a spring. But if it holds up here and it came dropping through Monday, open low, and then rocketed back up, I would see it as sort of a flip scenario of reversal, down then up. That could be really strong. You could see continuation upside. I know it sounds kind of backwards. It sort of is. But I actually see that as a better setup. Because that could launch you right up to the top. That's a 618 retrace. Yeah, that's 618. And then you do a 50-50 over the current top. And it puts you, the current top being right here. If I can get it down. This dumb box thing. That's the current top. So you do a 618 dive. Actually, advancing here at the last minute and then dropping makes sense too, because it kind of gives us a sense of like, oh, it's going to go. But then it just dumps the other way. It's a head and shoulder there. And then you drop down, you hit the 618, and then you do a 50-50 up over the top come next week. And it puts you right where you need to be next week. So my preferred outlook, weird as it may seem, is actually this. I think this would be really good. I would like to see it go ahead and make that retracement. Because if it checks that box, this is just an M cross. If it checks that box, then it can jump the creek next week here. And it should just break out and run up to this level. That's the reactive move from the top. It's the same as this guy. So it's sensible. It's the same move. It's perfect. And then it gets you back up to here. Then there's a chance, and it's a small chance, but there's a chance. Then there's a chance that this could then consolidate and continue to be bullish. I think that this is where things get a little dicey, because if you make this move and it doesn't advance correctly, you could be in kind of big trouble. I mean, you would be in big trouble. This has to then advance like in a healthy way, like this. It does kind of slingshots you back up to that gap, doesn't it? Yeah. So you build out like a halfway point to the gap. There. I don't know about the rest of this timing wise. And it's also confusing because this would be, again, going into that tariff thing. This had a drop on the tariffs, but it didn't have any kind of, it actually popped before and then dropped. So maybe this even goes up into the 9th and then drops. That would be good. I like that setup a lot. It's just this part's tricky because if it did distribute here, I think you'd be in maybe in a bad situation. It really depends on what happens right here. I think if you make a sign of weakness, I think it'd have to be below 22.11. Because it could be below this one, but I don't know if that's enough. So that could just be a spring. If it came below that preliminary support and made a sign of weakness, then I think you're more likely going to see that this could come right back down. Because it probably would generate. So it's a little bit tricky. So strength, I think it has a good chance to go all the way back up to 30. Weakness here, I think you're going to like potentially crap out at like 25 or 26, and you don't make that rebound. So everything else looks the same or roughly the same except for the ending. This has a distribution. So this would have to be like an SOW. It hasn't happened yet. So don't get me wrong. And then this would be a UTAD. And then you'd come down and make a new low. And this is like a breakdown here of the next level. So basically it's a breakdown of the next. So it's a macro SOW basically. And I don't know. At that point, it's a question mark because there is there's always a potential for spring, but so I would suggest if there's a sign of weakness here, we probably see that it pumps up and it fails and then it drops down. And if there's not, I think there's a good probability that we're going to actually have a rebound here that pushes back up to 30. I'll probably leave it at that. So market seemed to be receiving this news with relative, like, okay, you know, this is pretty good. I had already talked about SPY, the news of like the SPY coming up potentially to about 611 or a little higher. It's definitely pushing. Someone had asked me a while back, what if SPY just like keeps going, you know? Well, what if? I mean, the market has ways of building out expectations and then kind of throwing them in your face. And that could be the same for bears and bulls. So my idea that this was going to come up was really this idea that, yeah, it may come up to all-time highs or get close to it. And that's really the mark of a 5-wave sequence. At this point, it may be beyond that, you know. And I don't do Elliott wave more than that. I'm very, very limited. So there's different kinds of wave sequences, and 5 is not the only one. So you could have an additional leg here. The only thing I noted was like 630. There's a S-curve. I don't know if you can see that. That S-curve goes all the way up to 630. And that's kind of where it tops off. So it is following that quite nicely. I still see divergence. So if it were to have any kind of a downward move at this moment, you'd be in a bit of a problem area where you have kind of a macro divergence. That's bearish. It is lower. So if it doesn't continue and pushes RSI up higher, and it kind of builds out, you know, we're talking about a pop into the date next week. Very possible that we get that pop, but just be mindful of where that daily and 4-hour RSI are. I don't have the daily up. Because if it's divergent, it's probably going to have a pretty nasty slide back down going into July. Beyond that, that's kind of all the targets I have. I got one right here. You can see that was around 630. That's high end. Again, this was assuming that, hey, if this hits here and doesn't reverse or keeps building out into that tariff deadline, that's where you could end up. It's already been a historic bullish run. Could continue. We saw evidence that it just depends on which setup you use. There's evidence that this could build out an SOS here, right at the top, right above 613. So again, I've got it coming down below it, but it already made a higher push here. So that could definitely be a possibility that you get like an SOS here. You could also just have a continuation where this builds a larger motion to the upside, in which case you're probably going to hit 650s and then chop there. Either way, October typically is a downward month. September, October. So you're kind of coming to perhaps like a seasonal time when there's less bullishness in the market. Typically, it's not like it has to be super bearish. It could still be a bull market and have more choppy or sideways action. It doesn't have to be in a free fall just because it's October or something. But we noted that it was similar to this setup. It had already made this bounce, so it might push up and have kind of a double topping action. And it looks like it may get there. So we'll see. This is more speculative anyways. I was just thinking about how if it did top off, how would it come back down? And then again, these are kind of extreme examples of sort of the same thing. One is a really bearish October, you know, coming down low. I think if it does that, it could go all the way back to, frankly, it really could be coming all the way back down to 515. Although I think more reasonably 550s, because that's where the support has been built out as a secondary support. We didn't check it. So if you're going to have a pullback, but you didn't want to turn full bearish, that's a good place to do it. You could be above the creek there and build out. And then additionally to that, we had longer term targets going out into 2026 that be like 700. I mean, it could happen. That wave is currently being developed, in my opinion, because again, S curve part 1, should it hold up, has the potential for an S curve part 2. It also has the potential, as we know, every S curve could be an M top. So this still has the potential that this has downside again. I think it's up in the air. I think there's a reason why these are so extreme and different. And we're probably not going to find out until about November. I honestly think the next few months may be a bit more choppy than some folks like. They just want it to keep going up. I mean, it'd be great if it did, if you're bullish, but I sort of anticipate it's going to be a little bit more sideways and downward until we get news about rate cuts or something of the sort. Right now, people are pretty confident they're not going to do it in July. So July is that really bullish scenario of like, oh, they're cutting rates early. But only like 2 out of the many people on that Fed committee have said that they're in favor of that. Most of them seem to be in favor of waiting probably till the end of the year. So it'd make more sense to kind of have this sort of trepidation and time sideways or down in this time period, to me. And I think that follows. It follows with the rest of the expectations, and it allows for different tickers to do what they need to do. So sideways doesn't really mean good, bad, or anything. It could be that some are doing very, very well, and others are kind of taking more corrective measures. So we see this as like all of everything moving together. I also think in the back of my head, like I'm thinking about the Apples of the world. They may be doing fine, or they could be in the gutter, right? And the market doesn't have to reflect that. It's just one part of the bigger picture. Like the S&P 500, of course, as an ETF, doesn't have to reflect that. So it makes sense to me. I mean, I'm looking at Apple. It's up quite a bit after this move. I don't know what to make of this just yet, per se. But I do think that, largely speaking, in terms of like wave counts and all that junk, it could be done. There's a low wave right here that it could have just hit, and that would be that. The bigger picture waves, this has to be like an M cross, right? And it's taking a sweet time. This to me should have been like a really bullish move. I mentioned that the RSI had already crossed up, and that's true. It did right here on the 4 hour. So it looked good. I mean, and I'm making money on it right now, but the way I had seen this was an extremely bullish setup. So the first couple moves here are the most important. If the first moves fail to advance and come back down pretty low, I think that the expectation has to be lowered. If the first move here is really just a 210 and then it drops again next week, and maybe it holds up, that's fine. I mean, it could hold up. I think, though, you have to then lower your expectations because the following wave then would also just be kind of proportional to this guy. Whereas these two are very much sideways. This would also be potentially sideways. So you'd have a very similar kind of, hum-ha, several months going into August. That is one of the setups that I have here. It's kind of like this, if it does that. So that's one possibility amongst many. And like I said, I think it's largely going to be determined by the next week. If this outcome has any kind of strength to it and it ends up being good, then this iteration could be extremely bullish. Because if this little cross down here if this ends up pushing higher, then what that means is that I would look at it, again, proportionally and say that this is the fulfillment of that wave on this side. If it's very, very low and it doesn't cross up and over, but it crosses down, then it gives you a precedence that the next wave, which is here, probably doesn't cross over. Does that make sense? So on the one side, you guys are like, crossing over? What are you talking about? People dying or something? I'm talking about the way this moves, right? From an iteration standpoint. It's not a guarantee it's going to not change at some point. That could always happen based on news. But for the time being, like there's a big difference between this first wave jumping up and over and not jumping up and over. That makes sense. Huge difference, because this would indicate that, all right, we got some weakness, and ultimately like this iteration breaking out. And you guys remember the one I did that goes to like 300? That was like really hyper bullish, where if you take that and you use, not just hyperbolish, I'm a hyperbolic, but you take that and you use it as an iterative example, it was really just talking about each iteration fulfilling the larger cat ear push, not the like weaker one. So if it doesn't, then you've pretty much got a series of parallels. So this one would end up maybe coming back up, but it'd be weak. And again, probably hits here and fails to advance over the macro downtrend. It's still a massive widening, you know. It's still a massive widening. And this widening, by the way, still hasn't been fulfilled. It did break out here. My bigger concern was it was going to come back and try to check that creek again. I don't think it's impossible. I think it's possible it could still do that, but it'd be rough. But it could still do that because that's still there. It's definitely a possibility. I'm not going to take it off the chart just yet. This widening broke out and went sideways. So yeah, it should still come up if it's going to finish that widening. And that's usually a higher success percentage than not doing it. That would still come back up to 240. But that could happen way later, right? And then there's another widening that hasn't actually finished yet. And that doesn't take you much higher. There's kind of significantly in a similar spot. That's like 253. That's a bigger one. So 240 to 253 are very likely targets in the future. They just happen to also be the same as their all-time highs, you know, area. Yeah, of course. So the slower motion doesn't break out. It hits the second one, and then it iterates again. So on and so forth, right? And this is where it finally maybe goes up and reaches towards the top, you know, on the final breakout here. And that doesn't happen until probably August. And again, it's not bad. It's just the way it is. So I would look at it as just a series of, okay, it's not jumping. So if it doesn't jump, you have then a repetition of action moving forward. And who knows? And that could take a long time. I'm saying August, but frankly, it could be January of the next year. So it's hard to say. So then what remains, in my opinion, is... actually, that one doesn't look too bad. This guy right here doesn't look too bad. What remains is the more bullish outcome. And that's where if this jumps up and over, then pretty much it's the same thing, but you've already advanced. And that is a much more bullish setup. And it doesn't necessarily mean that it has to go any further, but if it does the same thing every time, then there's a good chance that this is now an all-time high by the time you hit August. And instead of having like a squeeze here where in mid-August or whatever before September, you actually could have a significantly new high, right? And it could push out in a very bullish way. This doesn't even get you to a new high going on the lower end. It really just takes you up to near like 250s. So this setup possibly widens outward and presents you with a new high, probably again near 300, like 280. And that's the one I had talked about before, because I said this is really bizarre because it's a very strong setup for extreme highs if it does the cross ups. And if it doesn't, I don't know, you're still getting 250, so it still seems like a good play to me. The biggest danger here is this potential for like a deep dive, and the more time goes on, the less likely I'm going to think this is going to happen. But when you get to these cross ups, that's why it's so important to kind of pay attention to the very beginning of it. This doesn't present itself like a super strong distribution at first glance, but you have to sort of make note of what's being jumped, and is it actually bullish. Right now it hasn't pushed over this final creek, which is kind of nice. And it also didn't push over the top, which is also kind of nice. So there's certainly room here to go up. But I would say that there's a little bit of a danger. It did come back above the high at 206, which tells me that it's trying to change direction. Okay, so that's the last known creek. That's the last known high, excuse me, that was jumped. So what does that mean? Well, I think, again, remembering that sometimes distribution goes up before it goes down. It's pretty simple to explain when you think about like that being the high. Where does that creek present itself? Well, there's one right here, like that's connected to it, right? That's at 197. That's probably going to be the most important. But there's a second one which has to do more with the tops, going from that high back here at 206. And that's this one. And that has been used. You can see there's like a double wick right here. So a drop beneath those levels would probably signify serious weakness. So from the area of, I'm not exactly sure where it's going to be. We may depend on when it gets there, but basically 201 down to 196 is a very, very important area. If it drops beneath that, kind of like what we had shown over here, and there is a gap there, so just keep that in mind. If it drops beneath that, you could be in very, very deep doo-doo very quickly. So worst case scenario on Apple probably is that this is distributive. It drops down beneath here. It drops through that level. Probably an attempt to get to, I guess, the gap fill, which might seem benign at first. But you realize if it goes to 196, you're on like thin ice. Pretty much like right on the bottom there. So coming back down through there in a distribution pattern after next week could be very, very bad. Very, very quickly. As you can see why that would put you in a pickle. And part of me wonders if the market does this anyways, just to kind of like spook everybody. I don't know. Maybe it doesn't really matter because that still looks like a similar move. And then you don't actually get a decision until like mid-July. Even worse could be waiting until like earnings. If that's a halfway point and it drops down to, maybe it's trying to go for that 211 gap. If it hits that 211 gap, y'all, and it drops back through there, I'd be a bit nervous. If it waits until after the backup, then I won't worry about it. But if it hits that 211.21 gap early, I'm going to put alert at like the bottom of that gap. I'm going to be a bit worried because I think if it does that, it could actually be quite bearish. It pushes up above there too fast. I wonder if there's evidence that if it hits that gap that it comes down. I mean, not more so than anywhere else probably. So where's that low? 182. Yep. That's the low. I think 182 is like the proper or like the expected price over earnings ratio. Like if you do the price over earnings, like the PEG, where they're kind of like saying, like, well, here's where the price could go. I think 180, 182 is where that price is. So it would be naturally the place you would expect there to be a drop. Actually kind of makes sense. I believe it's like 180. Yep. So I'm bullish for it, but I'm also like, it has to be good news, you know? Otherwise, I don't think it's a great buy, maybe till after earnings. If this tariff junk doesn't work out, it's probably going to come down here. to 180. Kind of don't like that, but I feel like I have to just wait it out. So I think there's a chance here that it's over. Should just go. Ooh, I don't like it though. This is a completely different iterative blowout. That's really dangerous too, coming down there. I don't see really any strong evidence that it should. No, because this didn't make a lower low. There's no obvious sign of weakness. Still. This is super low. That's not it. I suspect this guy might be a problem here, since that creek wasn't really checked. Well, I'll say this. If you're going to do anything with Apple, maybe prepare for 180. Just be prepared for that. I know it looks literally like the opposite again, but I think that's because we're on that cat ear. Flip around. So not going to talk a lot about Starbucks, but it looks pretty good to me. So I don't know. There's not really much to say about it. I called it out, said I thought it looked pretty good, but there were some issues. This was a weird push, went high and then dropped all the way back down. But that's like the M cross, right? And I was doing another one. So it's very violent. $95, $91, $95, $87. That's actually kind of a good thing. It hasn't pushed over the top yet, so there's no distribution. There's not like worrisome distribution yet. So if you had a backup here, it could be okay, is what I'm trying to say. Like you have a backup and continue. Once it breaches the top, you have to make a decision. So that's really where you got to look for it. Look out for it. Yeah, like part of me looks at this and I think, it's just a double top. It's like something you see on AMC where it's chopping low. It's doing that U shape. But I wonder if it goes up high anyways. It's just me thinking about it as a ticker and the way that it's been moving. It hasn't yet gone to some of these levels that I thought it might get back to on the higher end. thought it might get back and reset the April thing. I'm kind of staring at it wondering if this should be a little bit lower, like right around 97. Seems likely. If it hits like 97, I'm out anyways, but that would make sense to me. It's going to be close. I think it's 97. So I'm going to put 96.90. I'm just looking back here at these levels. There's like there's 1, 2, 3, 4, consolidation, 5, 6, 7, 8, 9. It seems like it was anchored in that middle, around 97. That doesn't mean it has to break down, but if it has a distribution here, it would be very ugly. There was weakness in this drop here, in my opinion. 90.32. It's crazy because it made a double bottom after that weakness. And then you see this reaction back up. But I wonder if it hits that area. And kind of like chops here into that tariff thing. Coming back through. Whew. Where does it go if it drops? It'd be really, really, really nasty. Honestly, it's probably going to go back to that $80 gap. Yeah. That's the right level too. Right here. Nasty. I don't know that that's going to happen either, but that would be where it would go, in my opinion, if it drops down after that tariff stuff. I'm not sure why tariffs would affect it that negatively, but they just do. Must be a lot of China products or something, because it dropped really hard last time on that news. I mean, imports, I guess coffee. We don't grow coffee in the US of A. So, as far as I'm aware. Yeah, I saw Wolf was up like 100%. But I don't know what to make of it, so I'm not trading it. I mean, they had announced the Chapter 11, and then they announced that they finally like filed it and had a plan to, I guess, try to fix the financials. I don't personally know what to do with that information because I don't know exactly what that means for the company. It's still underneath $1. So part of me is wondering if this is, again, just that reactionary move that we're seeing. It dropped from this spot on the 20th. It's a huge move. I mean, it was up like 100. It's up 120%. Gigantic move. But I don't know what that means. Like, we could be distributing right underneath $1 here. Like, I just don't know. This did pretty much exactly what was expected. I mean, you guys say whatever you want to say about about it. This is exactly what happened. And I said when I played the bottom that I was like, I think it's going to pop and go to like maybe up to near 2, but not quite get there. And then it probably do cat ears. It's almost exactly what happened. It looks like I just copied it. I didn't. But this is one of those situations where, again, it develops this really low, you can see there, develops this really low creek. And it's like, you don't want to play that. And you don't know what's going to happen. And at the end of the day, like, this is still probably the trend it's in. It just is. So I can get rid of some of this stuff now. We don't need to like boast about it. Let's just move on. But like right now, that cat ear is all but solidified. So we have a trend that follows. This one comes pretty far out. This one comes down like here. And then looking at kind of the more robust downtrend, like where's all the chop? That's like right there. So we're sitting right underneath it. Hit 132 in after hours. I mean, hit 110 in regular trading hours. But AMC hit, you know, high in extended trading hours and then open low. And it really just need to see that continuation. I don't know. Yeah, so it's complicated. I'm more nervous that it's not staying above 1. 1 tends to be a pretty strong psychological level. So if it gets above 1, there's a lot of creeks here. So I think if you can get above 1 and come up, I think you said 2, yeah. There's a decent gap space above here, you know. There's a pretty massive space between 150 and 2. So that's a 50 cent run that is possible. This is a pretty massive space that's unaccounted for the most part. So that's important to note, that if it got into this range, you might see some pretty significant movement. And then going backwards, since this hasn't had any kind of massive, you know, like a split or something, even though bankruptcy is a pretty big deal, I think that the trends are still fairly intact. You still got this bigger macro cat ear with the hook. And so, I mean, this is a possibility, this guy, this reaction, since it didn't happen over here, it's a possibility it's happening really low. There it is. What number did you say it hit? 132? Yeah. This measurement is 141. That's pretty wild. So it looks like that might just be that late reaction. Who knows? It could be a lot bigger than that, but then let's take a look at this is a curious case, Wolf, because it had a lot of potential, but they just kept dropping the ball. And unfortunately, with their elected president, they just did not get, they didn't get that money that they needed, I guess. But it's a really bizarre story to me. I mean, just talk about a fall from grace in terms of financial credibility, and it's an insane story. You guys should read about it. I don't know how much of anything was based on the CHIPS Act. I don't. But it seems really odd to me as a story, to like, why would you restructure your company and decide on a brand, you know, you're going to focus on a product that isn't what you've been focusing on forever, and not have like the plan in place, you know, if this chips thing doesn't kind of follow through. It's just kind of weird to me. Antara? Yeah. I think, though, these are like distressed loan people. Like, I think they know what they're getting into, you know, to some degree. This is an intersection right here. There's an area right around this top, and it looks like about July 18th. So there's a possibility. I don't know what happens between now and then, but between the 11th and the 18th, it's a long-term hook is what I'm trying to say. Like, there's a long-term wave here, and then there's a reactive target that actually didn't quite get hit. So if it gets hit between now and then, I'm going to suggest that it's done. But it's probably like this, you're going to get like a build out and then like a necessary sort of a sell down. And then you're probably going to have like one more buy-in to the upside, something like that. And I don't know how long that takes exactly, but that seems right. And then you'd have this build out to the upside. Again, if it happens before then, it's done. So how low does it go? Well, in theory, it already tested that. It dipped a little beneath it after the rebound. I mean, I guess it could just keep going, but I think it needs to make a higher low. I think it's going to try to dump it again. And then if it makes a higher low, it really makes no difference, I suppose. You see what happens, but it should come back down here and test this again. I'm trying my best to determine where it would be. It seems about right. And then let me see where that is on the Fibonacci scale. I mean, 100% upside move is great, and it doesn't have to stop there, but you have to remember that's a huge move, and there's a big gap there. Most of that's gap, so yeah, and then the 618 is down here. But we want to get to maybe 141. So let's see what the fib extension that makes the most sense is. I don't think any of these are going to make a lot of sense, but we're going to try it anyways. None of these are going to make sense. It's too far. This lower one kind of suggests that it's already done. This one. That falls in line with the second. All right, well, It seems like it's a bit of a mixed bag. I think there's both. So I think, yeah, both of these are going to be met. And then that's the bigger one. That's the biggest one from like way up top. All right, so I think it's pretty likely Wolf's going to get back to, or try to get back to this area here. But I don't know if it's ever going to go beyond like 150. I think it'll try to get back there. Just remember that from now until then, the time it takes to get there is very questionable. How low it goes is very questionable. So if you buy in right now and you're buying in when it's 108% up, you could be really fortunate and it could just keep going up. I would say a decent place to buy in probably is below 70 cents. And then again, if it gets back here, like a 50% retracement to 618 retracement. So maybe 3 buy zones. One's at 70, one's at 64, and the last one is down here at, they're all kind of equal parts, at 57. There's a support here that probably should be held, but I could see it kind of crapping out and then coming back above it, you know, and that being like part of the breakout move. So just FYI. It's hard to say. But I mean, the move already happened, the biggest part of the move, so. I thought about Wolf the other day, but I just thought to myself, I don't think I can justify touching it. Like, I was like, it was really weird how sometimes you see something and you're like, that's the one. But, you know, for every one that you see that does something crazy like that, there's a dozen that just don't. And so I just looked at it and I was like, man, it's really low. I wasn't really looking at the divergence or anything. I was just kind of staring at it. Oh, well. We'll have those moments, you know, in other stocks. So, all right. I know I didn't go through anything else today. Kind of went through a lot, though. It was my first day back. Hopefully that was a good information. And I'm going to head out. We'll talk to you guys maybe tomorrow. I should be on tomorrow some. I don't plan on not streaming, but you never know. So life has a way of throwing you curveballs sometimes. So you just got to keep an eye open if you want to watch. And we'll talk to you later.